Hi everyone, hope you are well. Mandilaka here. Welcome to my YouTube channel once again. So glad to see you at early this year. We left off last year talking all things wealth creation, property investment, how to avoid the enemies of your money, which are your inflation as well as your taxation. At this particular point, we are looking at how we are going to approach 2026, and I hope that you're going to continue joining us as we educate ourselves. This is literally not just me educating you, but this is going both ways. I've learned so much last year, as much as you did from me. I hope that we're going to continue to do this as a community. So I just wanted to touch on a few pointers for us as the start for this year, so that as we continue with the programs we have, the plans we have, the goals we have set. For those who might have seen on my socials, I've advertised that we are having a 3 months coaching session with 6 contact sessions, 2 sessions in each of the months, because we want to touch on critical things when it comes to our money. We want to start with setting financial goals. We want to work on budgeting. We want to put strategies in place so that we can do better this year than we did in 2025 and the years before that. We want to look at what are the benefits of being in a stokvel. Is it even beneficial? How can we approach the whole stokvel investment or contribution exercise so as to ensure that our money does not lose value whilst we are trying to build ourselves or build our wealth. So those will be things that I'll be touching on. I will later then touch on, we'll do a brief introduction for people who are interested in property investment. It'll only be an intro, so it will not be an in-depth session where we will be touching on all property investment aspects. We will actually just do an overview check on that, and also then we will touch on investment in stocks. Now, for most of us, many will know, and they would have noticed that I focused a lot on employees who are trying to build and create wealth for themselves, and that is still my mandate, because I believe that if you have a job, you don't have to feel bad about it. When you look at those who are running their own businesses, because each one of these two has unique challenges as well as unique benefits as well. So it's imperative for us to look at things within perspective and look at things within context. So don't lose the context. You don't have to lose your job in order for you to start your business. You can run your business whilst you are managing your month-to-month expenses with the salary you are earning from your employer. So let's look at that in a positive manner and learn how we can use our salaries to build wealth. Investing in property is one of the things we've spoken about last year, and we're going to build on that. But this year, so as to get ready, I just want to touch on 3 important pointers that should frame our mindsets as to how we are going to approach this year when it comes to our financial matters. So the first one that I want to talk about is, this is actually just a theme that I've taken from one of my favorite books, which is The Richest Man in Babylon. So this is partly influenced by this book, and this point I'm going to make. It says, take yourself seriously, pay yourself first. Now, if you want to delve deeper into what paying yourself first means, and to get just a thorough breakdown of that, please do get yourself this book, the Richest Man in Babylon. It will help you, and read all the other principles, because I believe this book is imperative in laying financial literacy foundation. And I think everyone, actually even people who are still in school, can read this book, because it's not so difficult in terms of the English that is used on it. And I think it is just helpful, whether you have background on finances or you don't. It's easy to read. It actually gives you fundamental principles that can help you alter. But now, getting back to my point, take yourself seriously and pay yourself first. You are the person who is working day to day in order for you to earn the money that you're making. It's imperative for you to reward yourself. I know that most of us reward ourselves by buying ourselves ice cream or buying ourselves a new pair of shoes every now and again, but this way of paying yourself is the one that guarantees you a better future, and that guarantees you freedom if ever you rightfully use the money you are taking towards paying yourself first. So paying yourself first means when money enters or comes into your bank account, you have a portion. You could decide it's a 10%. For those who are believers, you have the 10% for the tithe if you're tithing, and then you also must count yourself worthy to put a 10% on top of that first 10% for yourself this time around. That helps you to not always be in a space where you are desperate when certain things come up. So this could be how you build your emergency fund, and you could actually get to invest this money in other things that could actually grow your money way beyond what an emergency fund would do. But I want you to start taking yourself seriously and pay yourself first. It is a discipline. It doesn't come easy. It's mostly for someone who thinks I could use this money to quickly pay off a certain debt. Respect that principle and take yourself seriously. Pay yourself first. We will actually do a review at the end of the year to see how many have stuck to it, and then we can actually get to see over and above the financial return, there's the discipline that you'll get to enjoy. Because when you get used to this thing of when money comes in, you put 10% away for yourself, it actually starts becoming your second nature. And it's a great discipline to instill in yourself. The second one, I'm going to re-emphasize this point from last year again. What you make is not as important as what you do with how much you're making. Or let me put it that way. How much you're making is not as important as what you do with how much you're making. I want to say this year, consider what you are going to be doing with your money right now. Do not get surprised when money comes in, whether it's money you expected or you didn't expect. Please have systems in place that are going to take care of the money you're going to be making this year. Remember that those who are in the highest tax bracket in South Africa don't necessarily result in those who are the wealthiest, because they might actually be earning a lot and they might also be using their money in all the wrong things. They could be tied up in debt, and they might not be building financial, or they might not be building or investing in assets that will return or give them a return when it comes to their investment. But they might actually be using their money for their gratification right now, which means they are building on a sinking ground of sort, because of they are going to always have to maintain that lifestyle with money that they always are working for. But if you are taking that money and you are putting it towards assets that first saves you from taxes. Now we can look at, first, if you are an employee again, we can look at those who are contributing towards pension. I've spoken about this a lot last year, but I'm going to re-emphasize it because it's imperative. Increase your pension contribution until you have made use of the entire provision by the government of 350,000 rands that's available for you to get tax-free. And you are growing your investment towards pension. Your employer also could be helping you if they have a policy of putting 1 rand for every 1 rand you are contributing. That means your wealth for when you are retiring is growing at twice the rate as you actually are contributing. Yet you are reducing your taxes. That means you could actually be entitled to tax refund on an annual basis. That's the first hack. Secondly, maximize your tax-free saving account. Again, we are ensuring that our money is not depleted or depreciated by the taxes that we are exposed to, so that whatever growth that you're getting, it does not first get eaten away by taxes, but it actually is entirely due to you when you are actually getting it. 3, get to invest into assets that gives you more tax breaks. You know, I'm always going to talk about property. Property has more tax breaks that it gives you. If ever you are renting out your property and you're supplementing your income with by paying over and above what the rental is giving you, those extra amounts you are putting in, they are due to you as tax deductions. You go as far as having 5 properties in your name that you are financing. You get what the Income Tax Act is providing for people who are investing in property, which is called Section 13(6), which gives you 5% deductions on each of those properties, the value of those properties. That means you're reducing your tax exposure with time. And those are things that help us. And by the way, these are not things you wake up and you actually are great at overnight. These are things that take discipline and time. But I'm just trying to say, get ready. Make sure you prepare to be involved in these spaces so that you can grow your income. That actually helps us with that principle that says how much you're making is not as important as what you do with how much you're making. So do better and make better decisions this year. One last thing, my motto for this year is money is not my pursuit, but freedom is. I am not going to be apologetic about the things that I'm doing to ensure that there are more income streams that are coming my way. Most of us are actually, we have impediments that we impose upon ourselves because we are afraid to be fully sold out to the pursuit of the things that we have started committing ourselves to. For example, when I'm saying money is not my pursuit, it's not just the love of money that makes me do the things that I do, but I am doing the things that I do so that I can have money to buy myself freedom. I don't want to always be dependent on me having to clock in order for me to earn myself income. But I want to get to a point where I can earn income whilst I'm sleeping or in a cruise somewhere in Mauritius. That's the plan. And I cannot do those things without me getting my money game right. Hope you're going to actually follow through and bring your own pointers as well. Maybe share the things that you also plan this year that are going to improve your financial status, or actually things that you've already put into place or put into practice that have helped you to be financially free, so that others can also get to learn. I look forward to our engagement and to a great 2026. Thank you so much. Mandela here.